Good morning, traders. It's 8:01 Chicago time on Tuesday, the 9th of August, 2016. Thanks for joining me on another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight action um, seems very muted. Looking across markets, we see that essentially we are in the same position as we were yesterday, with the DAX this time leading the pack as opposed to crude oil. DAX up 90.9%, 94 points. Euro stocks up zero point 0.6, followed by the yen, and then we have the Nasdaq, the Dow, Russell, S&P, with the dollars up just 0.02%, and then the assets that are below zero or unchanged are crude oil, the bund, the euro currency, the 10-year treasury, gold, and the British pound. The U.S. Treasury bond is up just 3 ticks. So overall, not much difference between this morning's open and yesterday's. News-wise, there isn't anything dominant that I see on the news. The UK came out with its industrial production numbers in line. Manufacturing production slightly worse. Visible trade slightly worse, and then non-farm productivity in the U.S. Is a lot worse, negative 0.5 versus positive 0.4%. Unit labor costs 2% versus 1.8%. Um, and that's really it. As far as what we're expecting today, what we're looking for today, on the calendar, what's remaining is wholesale inventories, U.S. wholesale inventories at 10 o'clock Eastern, 9 o'clock Central, expecting 0%. Wholesale trade sales expecting 0.5% coming out at the same time. IBD tip economic optimism also at the same time for August, 47.3. And then we're looking for Disney earnings after the close. $1.61 is expected. We have a 3-year note auction at noon Central, 1 Eastern, and 4-week bills at 10:30 Central, 11:30 Eastern. So that's what's on deck for today. Now let's have a quick look at what we accomplished yesterday. So looking at yesterday's Trader Bite, the expectation is that we would open out of range. We had a continuation of Friday's rally in the Globex session on Sunday night and Monday morning Chicago time, and the expectation is that it would likely push lower. The market would likely push lower and then start to continue its move higher towards the next big target, 2185. That didn't happen. And then the next thing that was expected is an open auction, an attempt higher, a push towards to tag 2177. Expected a consolidation, and then for the market to rotate to continue higher, to continue basically the trend we've been on, to continue higher and to take out the overnight high and potentially go higher to 2185 as well as hypo 2. Hypo 3, because we were out of range, out of value, new all-time highs. The auction sometimes does not behave as we would expect. So I threw an auction 3 there, and auction 3, hypo 3, which was what worked out, an early attempt, an early push up to get us down to 2177, 2177 tag, that's shown right there. And then the expectation is for it to fail to stay out of Friday's high, which is actually 2178.50, not 2178 is shown here, and then a continuation down into the stem of Friday's trade, and that was pretty close to what happened. Let's take a look at what happened. Here's what things looked like. So overall, open auction out of range. Just an awful opening. Really, really choppy opening, very tight. And then it finally releases, gets to 2177 as you see here to the tick, bounces back up almost to the mid against the prior day's high, which is 78.50, gets to 78.75, drops back down, makes another attempt, drops back down, and then we have a continuation rotation from the prior rotation um, of 3.75 points versus 4.25. And then we have another test of mid, pull back, another test of mid, and then we finally get a double bottom stat here. The market puts in a double bottom at the IB low at 75, so the expectation is for pullback and a push through, which you got right in here, and then overall just sat sideways for the rest of the session. Extremely boring session. And what it had accomplished is what we outlined in that hypo 3. And overall, what we did is we migrated the point of control just slightly down, still inside of the prior day's value. So these 2 days are essentially balanced um, with each other. And so as we look at what happened to my opening swing here, should be up here. Um, as we look at the 2 days with each other, we can now go ahead and start putting a micro composite on this so we can see where the volume is and what it's doing. So clearly just above at 2179, 78.75, we have the key LVN above. We have a key LVN below at 72.75, which was the prior all-time high. 72.75 was the high before the break. It was the high from way back here on the 1st of August, right there. Um, and then overnight, what have we accomplished overnight? Practically nothing. Again, very, 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 very low volume trade, almost half the overall volume overnight. Oops, marked the wrong one. Clear. Uh, the overnight volume 117,000 versus 200,000, what we would consider to be normal or most common in terms of volume, the number of contracts. The volume, the point of control shifted up by a tick. Overall, a fairly balanced profile, a little bit heavy on the downside. And it looks like it had a pretty good test up higher towards that 2179 I mentioned, that key LVN above, and is resting right here. There's not much I can glean from this overnight profile to make it useful for the open. I mean, overall, all it's saying is that the market is accepting these prices over here. Where we were yesterday, it looks like we're opening in value, of course in range, but in value. So I'm expecting a choppy open. So this morning, instead of going on and on and on about these charts, this morning, let's just quickly go through the hypos. The primary hypo is what you would expect, open auction out of range, test strong potential for a test of 76. If 76 holds, then we're likely to try to creep up, but I'm not expecting very much range. That's hypo 1. Hypo 2 is a failure, is an open auction, an attempt higher before it fails down to 2176. Another attempt to break out, and then we get to the value low of yesterday. That would be hypo 2, and we start our shift down, looking for a point of control to shift down on hypo 2 and for the market to start rolling over, rotating down and heading towards 2164. or so. That would be hypo 2. So since we're not out of range or whatever, I'll just stick with 2 hypos for now. And that's really it for all that I had to say. The other thing I wanted to go over is make sure you know that there's an AMA on Wednesday at 3:30. There's the Futures IO webinar on trading habits, part 3 of the mini series I'm doing there on Thursday at 3:30 Central. Again, 3:30 Central, 4:30 Eastern, Wednesday and Thursday. Look for the links on my Twitter feed and in the description of this video for the AMA. But I also wanted to make sure that you're taking the time to follow up on what we talked about last week, and that is you're setting goals. Um, this kind of environment, by the way, I just want to make sure I get this message through. This kind of environment where the market is just very lackadaisical, lulls you to sleep. This is the ideal environment to build terrible habits. This is the kind of environment that rewards you for doubling down on risk or expanding a stop. It's the type of environment that allows you the opportunities to just hang on when the market is clearly when the trade has uh, not accomplished what it's supposed to do, and you should get out. This leads to complacency once the market breaks out of here, and the markets have always broken out of here and is expected to break out of here. The market consolidates, gets really quiet, and then has a strong move out of this region. That's the normal habit. And what happens to most traders, to a lot of traders, and I've seen this in my own prop shop, is people get too relaxed about what they're doing and they start basically practicing poor habits. And in doing so, once the market releases, they get crushed and then they lose sight of what their correct habits were that they worked hard to develop. Don't allow that. Just don't allow yourself to all of a sudden give yourself so much more room on risk. It's better not to trade and to miss a move than to force trades and just be very relaxed about your discipline. Okay, so that's really important for you to note. Either take it from me or learn it from the market the hard way. It's up to you. But overall, this is a quiet part of the year, and the market's behaving accordingly. So uh, this is a good time to practice what I talked about last week, which is to figure out what your goals are and to make sure you're hammering on whatever it is you're focused on this week, whatever your goal is for this week, whether it's to practice patience. This is a perfect market for practicing patience. It is really hard to sit here all day and not do anything, but if that's what your job calls for, that's what you do. Um, so just make sure you're practicing something very deliberately and have defined what it is, what the steps are that you're doing to fulfill that practice. This is the time to do that, and then by the end of the week, you should measure your progress. I know that sounds dry and boring and so on, but that's just a core part of learning to trade professionally is to identify your weaknesses and to hammer on them with every market session. Good luck, and I'll catch you tomorrow. Take care.